This conference will now This conference will now be recorded.
Okay. Hi, everybody. Good morning. Joe Marion from ASCDI. I want to thank you all for joining us today. We had a really good registration for this meeting. We had about close to 60 people, 56, I think was the actual number, who signed up for it. And just when I thought everybody was a little bit zoomed out, I was pleasantly surprised by having everybody join us today. And it's really an important topic, which we're going to discuss today. It's affecting businesses all around the world and our members all around the world. A lot of times, some of these webinars are U.S. centric. This one is worldwide centric. So I'm really excited to see that we have a good number of our European members. We're going to be recording this webinar today so that we can share it with our APAC members later today as well. So I want to thank you all for joining us today. I'm going to start by introducing. Before I do, Neil Ville. We have Neil Ville. Neil Ville from World Data is a board member of ASCDI and a sponsoring member. And we asked two of our sponsoring members to kind of come on early today to kind of just introduce themselves. So take it away, Neil, please.
Good. Thanks, Joe. Neil Ville. I'm Chairman and CEO of World Data Products. We're located outside of Minneapolis in Plymouth, Minnesota. I've been in business since 1987. Traditionally, we've been a reseller of refurbished servers and networking gear and related components from manufacturers such as Cisco, Dell, HP, and IBM, and several others. We acquired a certified tape media business a number of years ago. We offer board-level repair services. We've been ISO 9001 certified since around 2011, and we're currently pursuing our R2 V3 certification, which is targeted for June of this year. And that we're also offering ITAD-related services to end users and also as a subcontractor to other intermediaries. Regarding the topic at hand, export regulations are very important from a national security perspective, from a business perspective. And the ball got rolling for this webinar back in November when Barbara, who's on the call from World Data, who is responsible for our export controls and watches this stuff like a hawk, made me aware. And then I made Joe and Todd and Arthur aware of a new set of export regulations related to China. And one thing led to another, and I applaud ASCDI for organizing this webinar and bringing everybody up to speed. World Data is proud to be a sponsoring member of ASCDI, and we're looking forward to this session. So thanks, Joe.
Thank you, Neil, and thank you again for your support of ASCDI. Our other sponsor member for today is Jennifer Larson from Vibrant. I don't see where Jennifer signed on, but I'll pass my thanks and everybody's thanks on to Jennifer for her support as well. The moderator for today's event is our own Arthur Fireman, ASCDI Association Counsel. Arthur, take it away.
Good morning, everyone. Nice to have you all with us. As Neil mentioned, we became aware, he helped make us aware of this whole new set of regulations concerning China that came out or that have been coming out since October, I guess, September, October. And when we sent out some type of summary, the questions started rolling in. And the important thing to remember is that that's just the latest round. When you hear EAR, OFAC, ITAR, ECCN, what do all those things mean? How do they affect your business? And what are, as Gary, who I'm going to introduce, properly said, what's the minefield out there that you have to be watching out for when you're exporting or importing IT products? And we have the perfect panel put together today to help identify the mines in that minefield. And you'll first be hearing from Christine Pernia. Christine waves, so at least people know who, right? You'll be able to tell later when she's speaking. Christine's a member of Sandler Travis Rosenberg. Some of you might know Lee Sandler, who has worked with ASCDI and its members for many years. Christine is a member of the firm and joined Sandler Travis, where she serves as vice president and deputy general counsel for global trade controls. Where she worked previously as Vice President and Deputy General Counsel for an international company taking care of global trade controls. There, she managed a large team with responsibility for global licensing, investigations, disclosures, policy and tool development, training, communications, audits. She's the perfect person to be guiding us today. Relying on her 15 plus years of experience in trade compliance, Christine counsels clients on understanding and complying with export control laws and regulations, including the EAR and the ITAR. And by the way, if you don't know what all those acronyms are, you'll be hearing more about it. In the US and overseas. She also developed strategies for evolving sanctions under the OFAC regulations and has expertise in managing CFIUS reviews and fundings. That's CFIUS, Committee on Foreign Investments in the US. She also advises due diligence and investigation efforts related to mergers and acquisitions. So these issues affect every aspect of your business, even if you're selling it. After Christine, we'll be hearing from, After Christine, we'll be hearing from Gary Merkin and Noah Sussman. Joe, you want to put their slides up, or whoever's running the slides? They are representatives of TechX, and you'll be hearing about TechX, which is a unique company that provides import and export compliance in over 200 companies around the world. Gary is Vice President of Importer of Record and Compliance at TechX for the past 7 years. He's a specialist in the global deployment of IT equipment, focusing on import compliance, as I said, in over 200 companies, as well as foreign indirect and direct taxes, which is a critical part of your import-export efforts. Noah is the global sales director at TechX for the past 5 years, and she'll be able to give us some great case studies and also discuss how TechX serves our industry in import and export. With that introduction, I'm going to hand the microphone over to Christine to begin the presentation and give you the background of the regulation framework and how the U.S. Impacts all of the import and export that we get involved in. Christine.
Thank you so much, Arthur. I appreciate the introduction and the opportunity to speak to everybody today. So this year marks my 20th year of practicing law. The vast majority of it has been spent in export controls and sanctions. And I have to say, it's been a wild ride. So when I first got into this practice area, it was interesting, and it was all reliant on geopolitical changes. But I would say the last decade has been particularly pretty crazy. And you guys may know that just from reading the paper. All the issues with China and now Russia have really, really pushed export controls and sanctions into the forefront and made it sort of an everyday, compliance issue for many, many industries. So I just would like to quickly take you guys through sort of the landscape and framework. I will talk a little bit about the new rule related to China and the semiconductor manufacturing industry, but really in order to comply with that or even understand it, you need to have some sort of basic foundation for how that might apply to your particular company. And so I just wanted to take the opportunity to kind of make sure we have the right groundwork in place. And then, as I said, I will touch on that particular new set of regulations as well. So, in this area, one of the things that is just readily apparent to me over the years is that it's really hard for companies to kind of grapple with this particular area of compliance. Because one, it's complicated. There's various agencies involved in it and sets of regulations. Those regulations are really dense. They're constantly changing. So it really, from a US perspective, is already hard enough. Then you add in the EU jurisdiction, as well as other jurisdictions around the world have developed similar types of export control frameworks. And so when you're a multinational company or company dealing, in cross-border transactions, you've really got a lot to think about. And not all sets of these export regulations across the globe are the same. There's important distinctions and nuances. It's also really operationally difficult to comply with these types of laws and requirements because it does touch all different functional teams within your organization. This cannot possibly be just owned by legal and compliance. It requires sales, it requires IT, it requires logistics and traffic. It really touches a whole bunch of different folks within the organization. And then also, it's one of these things where it's not a moneymaker, right? This area is about compliance, but there are huge fines and penalties involved at times for violations. So on the next slide, I can kind of just give you a sense of what that looks like. If we could go to the next slide, please. So just to give you guys an idea, under the relevant, there's several different relevant statutes, but it's approximately about $300,000 per violation, or twice the value of the transaction. So you can imagine, in many cases, it's not a one-off violation. People have maybe missed some change in the regulations, weren't aware of the regulations, and you suddenly find yourself with dozens, if not potentially hundreds of violations. So it doesn't mean you're going to get assessed at this very high potential amount, but the theoretical dollars in this area can stack up really, really quickly. And for those, this is more rare, but where people choose to willfully ignore the export control regulations and sanctions requirements, there are absolutely criminal penalties. People do go to jail for this. The fines, of course, are higher. But this is an area where, again, as Joe said at the very start, this is all about national security. And so the government takes this, both the US government as well as the EU, the UK, they take this area of compliance very seriously. Next slide, please. So in addition to the penalties, it's important to understand there's three, as I mentioned, it's complicated. There's three key agencies involved in export controls and sanctions. First, the one that we're going to focus on mostly today is the Department of Commerce, and they have a set of rules called the Export Administration Regulations, the EAR. So you're going to hear that acronym a lot. And for most of you dealing in the industry that you do, that's what's going to be most relevant, at least for your products, for the movement of your products. So for those items, and we'll talk a little bit about this, there's a way to, not all equipment is created equal. So depending on the technical specifications of the equipment you're dealing in, and potentially the software and technical data that you're dealing in, the running rules will change. So we'll talk a little more about that. The next agency that you need to be mindful of, and this will apply to pretty much everybody on this phone, is the Department of Treasury. Department of Treasury, the Office of Foreign Assets Control, OFAC, you're going to hear that acronym a lot too when you talk about sanctions. OFAC is in charge from a US perspective. They're the lead agency when it comes to embargoes and sanctions. They have embargoes and sanctions against countries. They have embargoes and sanctions against individuals and entities. So essentially, for lack of a better term, it's a no-go list that incorporates and addresses both destinations, people, and companies. So it's important to know that OFAC is very aggressive about their jurisdiction. It has nothing to do with whether you're dealing in US origin products. It has to do with whether you have a nexus to the United States. So if you're doing business in the United States, if you use US dollars, there's a whole bunch of ways that OFAC can say, well, we, for example, for the members on the phone from other jurisdictions, it is definitely possible that you are subject to OFAC's rules. And then finally, probably less relevant for most of you on the phone, but something to be aware of, there's a set of regulations from the Department of State that focuses purely on military items, and that's called the International Traffic in Arms Regulations, ITAR. So ITAR, for those of you who play in the ITAR space, you know this is a very, very rigid and robust set of regulations. They're highly complicated, and violations in this area can carry really severe penalties. So if you're in the ITAR sandbox, you should, I would assume, have a pretty robust compliance program set up, the requisite licensing, etc. But we're going to focus mostly on the EAR and a little bit on OFAC today. Next slide, please. So really quickly, export, I think this group really understands, but the exports, definition of export is going to be the movement of hardware, software, technology from one country to another. These exports could be permanent, they could be temporary. There's also the concept of the export of technical data, even within the United States. So sharing sensitive technical data with foreign nationals in the US. Re-export, I think everybody can also kind of understand the term generally, but it is important for those of you to know on the phone, again, for non-US members, that you, again, the EAR is going to apply to the re-export of items that US origin items or items that transited through the US. There's a couple other ways that the items could be subject to US laws, but really important to know that if you're dealing in US origin items, that's kind of the key way, that no matter where that item goes in the world, how many times it gets re-exported, it's still subject to the EAR. Okay, next slide, please. Okay, really quickly, we're going to go through the 5 W's because this is really what's going to help you think about where you may have export control risk. So the first slide, we can go to the next slide, is going to talk about what the product is that you are exporting. So next slide, please. So I'm going to go ahead and start as the slide comes up. So this relates to knowing the export classification of the equipment, again, or software or technical data that you're dealing in. I can't emphasize this enough. This is very, very important that you understand what is being exported. Now, I'm speaking from a US perspective at the moment about the ECCN, but there is a basically the EU and the UK and other jurisdictions approach this in a very similar manner. They assign a classification code for export purposes to the product. And based on that classification, that is going to drive the running rules related to the items you're looking to export or re-export. So without knowing this, and I know it's tough in some situations, particularly, for resellers of equipment, you're not the manufacturer, you don't necessarily have, in some cases, the ECCN readily available to you, but it is imperative that before you export US origin products or re-export US origin products, that you determine and get comfortable that you have the correct export classification number. That is going to tell you where you can export it in the world, who you can export it to, without having to first get a license from the US government. So if you don't know this information, you basically you're off to a terrible start from the beginning. You're most likely going to trigger violations if you haven't at least assessed this and gotten comfortable. The good news is most, not all, but most products are EAR 99, meaning they're in this very low restricted category and they can go almost anywhere in the world other than the fully embargoed destinations. And I'll give you that list later. But unless you have determined it's EAR 99, you must, particularly if you're dealing in encryption items, items that use or call on encryption, you very well could find yourself in a more restricted category. And it's really important to make that determination upfront before the item is being exported. Next slide, please. So the second W of the 5 is going to be, drum roll, who will be receiving the item. So end user controls. This is really important. You probably have heard that the US government, as well as other jurisdictions, have a list of what they would say are no-go, bad destinations, or potentially bad actors. You have to make sure that you're not selling and transmitting your items to folks who are on these government no-go lists. There's a list here, BIS entity list, OFAC SDN list, but there's many. And so often parties there's something called the US Consolidated Screening List that's a publicly available resource online for the US list. But many companies invest in getting third-party software screening tools to make sure that where they're sending their stuff, who they're sending it to, that it's all clean and that you don't need to go first and seek a license from the US government. Okay, next slide, please. The third W that we're going to talk about is, I won't go quite there yet. I'm not going to spend too much more time on this, but who will be receiving the item Again, it's important to do the screening. Diversion is a major issue, particularly with the type of equipment that most of you are dealing in. So diversion to prohibited destinations happens all the time. Dubai is a big kind of floodgate into Iran and Syria. You see things going from China to Iran fairly often, unfortunately, in North Korea. So it's really about understanding where your products are being ultimately used to make sure that you're in compliance with the laws. Okay, next slide, please. Okay, why is the end user seeking the item? End use control. So this is the one where it's really important to know, to have sense of who you're selling to and what they're using the products for. So this, I'm going to touch base really quickly on the new China-related restrictions. So, you know, the U.S. government sort of unilaterally decided that it was time to try to squelch China's advancement in the semiconductor manufacturing industry, particularly for chips that could be used for military purposes. And so they set out a pretty dense, I'll say very dense and complicated set of regulations. At the end of the day, really what they're trying to prevent is the further advancement of the Chinese with these military-related chips. And we're looking at things such as advanced computing and the use in supercomputers. So if you are dealing, I mean, again, it's very complicated. There's a lot of different analysis. You need to know your export classification numbers. You need to know who you're selling to. And ultimately, you need to ensure that you're not selling into, in most cases, these types of end uses. So it requires a lot of diligence and on the part of industry to understand, you know, how the products or items that are being transferred are being used. But this is sort of a short way of saying, okay, is there a possibility that, you know, the items I'm looking to deal with, could they be used in advanced computing and supercomputer end uses? If that's the case, I highly suggest that you work with legal counsel, to make a more refined determination of whether or not you're going to need to seek licenses from the US government. And please know that just because you seek them doesn't mean you get them. So it depends on the facts and circumstances. I would say for supercomputers, good luck. You probably will not get licenses upon request. There may be some rare exceptions to that. So it does shift the burden in many ways to industry to understand in more detail how the products that you're dealing in are being used. Next slide, please. So the fourth W is, where is the item being exported? So this is really important. It's not that complicated, but it's really, really important because people mess this up all the time. Do not send items to Cuba, Crimea, the DR and the LR regions of the Ukraine, which are newly added to this list, to Iran, North Korea, or Syria. Even for those EU members and for those in APAC, before you do so, you need to make sure you're not subject to OFAC jurisdiction, which you very well may be. So don't just take it as, well, I'm not a US-based company, therefore these rules don't apply to me. That is not necessarily true at all, in fact. So, but if you are a US-based member, know for sure that these are absolute no-go zones. So, and often, like I said, it's not that you're shipping directly to one of these destinations, but you would have had red flags or reason to know that potentially the person you're dealing with may divert or transfer the items to these jurisdictions. And if the government can show that you had reason to know and you didn't do proper diligence, you're going to be liable for this. So it's critical to know these are the no-go zones. In addition, there's other high-risk destinations where maybe it's not a full embargo, so not a comprehensive embargo, but there's still very, very strict rules about what can go and who it can go to. And that includes Burma, Cambodia, China, Russia, and Venezuela. So if you're dealing in those countries, or you have reason to believe the people you're working with are then moving items or technical data onto those countries, again, I strongly suggest you take a closer look at what's going on to make sure that you're not running afoul of these rules. And then finally, the next slide, the last W, which I won't spend a lot of time on, but I felt it was imperative to at least raise because it is critical to the overall program, is the US anti-boycott laws. So this is where it's for US persons, if you're receiving requests that essentially are fostering and facilitating the Arab League's boycott of Israel. You're getting this comes up in shipping, letters of instruction, it comes up in commercial invoices, it comes up in a variety of different ways. The point being, in many cases, it can be unlawful and needs to be, you cannot comply and it needs to be reported to the US government. So I won't go into too much detail here, but do be aware that this is another piece of an overall program when it comes to export controls and sanctions. And I believe that covers the basics. So to give you guys some foundation, I know I just spewed a lot of information about a lot of different kind of topics under this broader umbrella. But I think that the takeaway is, listen, like this is complicated. And if you are engaged in cross-border transactions and you are dealing in, particularly if you're dealing in US origin items, but even if you're dealing in EU origin items, UK origin items, there are similar rules, export control and sanctions rules by other, by our allies. And so we need to make sure that you're doing it in a way that is thoughtful and compliant with these requirements. So with that, I will turn it over to my fellow participants.
Christine,
Okay,
just one question. Arthur, just one question, a clarification, if you could, Christine. You mentioned several times products of U.S. origin. I mean, our people are dealing primarily in technology products. There's nothing physically made in the United States. But so that this is a three-part question. But the first part is, so what when you say products of U.S. origin, if they have software in it that maybe when it was first that was manufactured in the U.S. or what is a product of U.S. origins? The first question.
Yeah, that's a great question, Joe. And there's it's a little bit of a complicated answer, but I'll try to be succinct. So clearly, if the product was made in the United States, it's going to be subject to the U.S. export controls. Okay. If the product is made abroad but incorporates a certain amount of U.S. origin components that are controlled, and it gets complicated, but it's very possible that foreign made items, if they're using a certain amount of US controlled content, then they could also, those foreign made products could be subject to the US export control rules. Also, if they're made using certain types of US origin know-how, technical data, those foreign made products may also be subject. So this is why for resellers, it can be very difficult to know what the ECCN is or whether it's even subject to the EAR. And so it's a fairly nuanced. And then the last way is this is pretty obvious too, if it transits through the US, it's going to be subject to the US rules, even if it wasn't made there or made in the US. So unfortunately, US origin, very clear cut if it's manufactured in the US, but even foreign made products, if they incorporate enough US controlled components, or if they use certain types of technical data to be manufactured or even equipment to be manufactured. And sadly for everyone, other than export control attorneys, where this is how we earn our living, the government has made these rules even more and more complicated because, for example, what's subject to the EAR, foreign made products subject to the EAR, differ based on different destinations. So with China, they've now, part of the new rule for the semiconductor industry is the US government has said, okay, we're going to capture more foreign made items under our jurisdiction umbrella. So we're going to have separate and distinct rules for items going to China that are being used in these particular industries. And so it's a very poor answer, but there's really no easy way to answer your question because what is going to be subject to US jurisdiction in the EAR is going to differ.
And the second half of this question is you mentioned Nexus. If you trade in U.S. dollars, what about if you travel to the U.S. once a year, or, and you land in New York City? Do you have Nexus? And if you're a European company.
Yeah, so for the OFAC rules, so the EAR is based on almost all the EAR, the part of the regulations is based on jurisdiction over the product, but OFAC is based on jurisdiction over the entity or the person, the individual. And so that's the US nexus is for the sanctions rules, the OFAC rules. And yes, even things there's no clear formula about how OFAC approaches that, but if you're coming to the United States, if you're if you're taking advantage of the US market, US financial system, if you're taking advantage of the US courts. There was a Chinese company that filed for bankruptcy like decades ago in US courts and that otherwise had nothing else to do with the US, and OFAC said, well, we have jurisdiction over you. So you have a nexus. And as folks from other parts of the world who may find themselves in violation of the OFAC rules and they come to the United States, very well could be susceptible to arrest and other types of trial and all of those things. So it's really imperative for non-US based persons to understand what their exposure is under the OFAC rules, because
It sounds like the rules were written so that if they want to get you, they can find an excuse to get you. Really.
Well, OFAC won't say that, but I would say that that's about right in layman's terms.
Yeah, a couple of questions, and then we'll switch over, Arthur, in 1 second. But
yeah, I see some. Yeah, I was going to say I saw questions pop up, but I don't have the full question. Do you?
Yeah. So Huawei equipment. Can Huawei equipment be shipped shipped from the U.S. to Europe or other places? And I know there's a big movement by the U.S. government to get Huawei equipment out of the U.S. networks. But so you have this used Huawei equipment. Can you ship it over to Europe, Asia, and wherever?
So the rules, there's different rules for Huawei. They have, so that's like kind of specific to that company. So Huawei is on the US entity list. So you cannot transfer them US hardware, software, or technical data. You can't give them that or a bunch of their subsidiaries that are also listed without getting a license from the US government. So that's about providing them with something. And that comes up.
No, but what I'm talking about is Huawei equipment. Oh, okay.
I know. So, but that's because it's two directions. There's rules related both to what you give them, but also there's rules now related to what Huawei equipment can be used for example, in the United States, you're right, the US government doesn't want Huawei equipment in sensitive applications, infrastructure applications, because they're concerned about spying and espionage. So they don't want them, and they're also, of course, trying to strangle them from the 5G market. They want them out of that. So you're absolutely correct. And this is the way, this is what has made all of this very complicated, is that we see the US government now targeting not just countries, nation states, but actually targeting certain companies, right? And having nuanced and special rules just for a company. And that's a whole departure from how things, when I first started in this area, that was very unusual. But we've seen that with ZTE, we've seen that with Huawei, we've seen that it just continues to be Gazprom and different companies in Russia. There's just certain unique rules now that they've developed.
So this subject matter is a perfect example of the lawyer-like answer when you ask a question, and the answer is it depends. And with that, I just want to be sure I give the appropriate disclaimer that I promised Christina I would include, which is you can't get your legal advice here on this call. If you really have a question about a specific situation, then the facts are always different. And you're going to hear more about that, I think, from Gary. The situation is always different for every import and export. And that's why if you really do have a legal question, you do have to consult your attorney or someone that is knowledgeable in the area. With that, you now have managed somehow to get through all that, and you have your IT equipment on an airplane flying to some jurisdiction. What happens when it gets there? How do you bring it into that country? Have you done what you have to do to make that happen? And that's where TechX can be extremely helpful. And they're going to walk us through some of the, as I said, the landmines in doing that and where you can get some help. So who's going to start, Noah or Gary?
So this is Gary here. I'll jump in where Christina's left off there. I think just to maybe put things in a little more context, of how these transactions will work. Generally speaking, the primary responsibility of the US sellers generally on the export side. On the import side, in an ordinary transaction, there will be a buyer who's then going to assume the risks and the responsibility of the import. That's in most industries, that's the most common. And the other than working on your end user responsibilities with regards to your export compliance, the involvement from the US side is usually rather limited. However, in the IT industry specifically, there are multiple very common use cases where further involvement from the US seller, or the European seller for that matter, is going to be required. And I'll walk through one or two examples of this just to maybe set the scene here, and then I can walk you then through the process that needs to be followed to make sure you're taking care of all of this. Because if you have product that you put into a shipping network, so you ship it out to a foreign country, and you have not taken care of the import requirements on the other side, those goods will be stuck in customs. They can be seized. You can inadvertently jeopardize your export stand-in with the US authorities as well by making mistakes there. And you can also, in the end, land up, with confiscated goods and major delays. So it's a tricky minefield. Every country has their own, regulations. But just to take a step back, in the IT industry, you will very commonly see projects where there will be a central procurement function. So a US company might procure assets from you and require them to be delivered to 30 countries around the world, to different offices. Or a US company might have data center presence where they don't have an actual office, but they have a co-location facility, and they would like, goods to be shipped into that co-location facility. And the terms that you generally see on these types of transactions are DDP, which is delivery duty paid, or DAP, delivered at place, which allows the buyer to specify where they want the responsibility of the seller to end. So you might find yourselves in a situation where not only do you have to comply with export regulations, but you are also responsible under the deal for complying with import regulations in the destination and the local delivery and handling and everything that goes along with that. Now, in order to do that, you obviously need a very broad knowledge base. There are certain prerequisites that need to be established in each country in order to be the importer. And the most important thing is to actually have a physical entity registered, a company that has the appropriate licensing in order to import into that destination country. And that's kind of just to add context where TechX steps in. We essentially are the partner in country that helps out with all of that complexity and helps you navigate that part of the transaction. So if you could switch to the first slide, which basically just shows a basic process flow, just how a typical import, with TechX or any other sort of partner would work. Now, when you're shipping IT equipment into a foreign country, the import process starts in the exact same place as the export process. You need to classify your goods in order to know what licensing and regulatory triggers are going to be, triggered by your export and import, and what you're going to have to essentially comply with. That's one side of it. And the second side is you have to establish, what tax structure you'll be exposed to in the foreign country, whether this is just import taxes, duties, as well as, other direct tax exposures that you can have by sending equipment to foreign countries. Now, when you generally ship, your starting point is preparing a bill of materials, or some sort of, commercial invoice. And one side of that is you will classify according to US export regulations. There will be, an EAR or, some sort of HTS code or ECCN number that will have to, accompany those goods. And each product that you ship is going to be unique depending on its exact specifications. That means what your product is capable of, what software it has on it, and what are its technical specifications. Now, that in itself, as Christine mentioned on the export side, if you get that classification wrong, you're almost dead in the water from the start, because any compliance work that needs to be done on the export and the import side is going to be based on those classifications. So step one, you need to make sure that you get an accurate classification. There are various ways to do that. Our personal favorite, obviously is from past experience and the databases that the manufacturers of the products provide. For example, we have a system where you input the product number and it automatically matches it to the technical specifications and classifications that we have on file. Once we have that, we can then establish, what are the export and import requirements of that specific classification into the countries that you'll be shipping into. Do we need to apply for import licenses in the foreign country? Do we need to apply for certifications? What are the homologation requirements of that product? Does it need to be certified at the factory level? Does it need, for example, into China, it seems to be the subject matter today, do you need to have CCC certification? Do you need to have any other local certifications for China? What import licenses will you need for China? And this is over and above any licensing that you will require from the US export side. Now, once we have that information, that classification information, we will determine, what is required. And then should you as the exporter and the seller be responsible for getting the goods into the foreign country, we will then have to work on those import licenses. And all this needs to be done prior to shipping, because if you land goods in a country that is not correctly licensed and is not correctly certified, those goods will be seized by customs, or at the very best case scenario, it will be a very lengthy process to retrospectively get that done. And while you're doing that, you're going to incur many penalties, storage costs, and all sorts of other things that will likely wipe the margin out of your deal, plus some. So this is something that is very important to take care of up front. And every country is different. We operate in 200 plus countries around the world, and every location has a different end game. Some countries prefer to permit things that are very specific around security. Some countries it's encryption. Some countries it is simply broader licensing around IT equipment. Some countries it is end use. So it's something that really needs to be addressed prior to shipping. Another thing that's important to look at prior to shipping is what is your tax structure going to look like in the foreign country. If you import into certain countries, you could trigger certain indirect and direct tax situations that you need to avoid, because these will really add a lot of cost and hassle to your transactions if they are not dealt with upfront. So you need a partner who can kind of look at your deal and look at your transaction and advise you what the tax structure is going to be, what taxes you'll pay to customs upon importation, what duties you'll pay, what subsequent tax responsibilities you may or may not have in the foreign country. So that's something that really needs to be looked at, up front. And then, lastly, what sort of local support do you need, in the foreign country, should you complete this transaction? Simple examples of that would be you may get audited in the US from the export authorities' perspective. They might want to know, where are your assets housed in the foreign country? What is their current use? And in order to fulfill your audit obligations, you will need local support on the ground, someone who knows how to manage these processes to guide you through that process and make sure that when you do get audited, you can comply and you don't land up with those expensive penalties and things like that that Christine mentioned. And any other local support required is something that really becomes very critical when you run into audits and issues and handling problems, and should you have to repair or replace units, you need to have partnership on the ground. So I mean, from what I've said there, the process that we would generally follow and we would advise the members to follow when shipping is, first of all, understand your classification. So reach out to a party who is knowledgeable in such things and make sure that you've classified your goods correctly. Secondly, make sure you are compliant on the export side. Thirdly, make sure you are compliant on the import side. Fourth thing you need to look at is, what is your tax exposure going to be? And then the fifth thing that you need to look at is, what are your local and end user requirements in country from a handling, from an audit, and any sort of local support that you'll need post shipment, in that specific country. So step number one, notify your partner and your classification partner of what you're shipping. Prepare your shipping documents, put your goods through an export compliance review, get your license in, get the goods onto a flight once you have your licensing both on an import and an export side. Once the goods arrive through customs, then you are responsible for getting them, to your end customer and making sure that you have proof of delivery and you understand where your goods are going to be housed or stored and what they're going to be used for, because that's an important part of your export compliance. Remember, this only applies, if your customer is making you responsible for the import side of the transaction. I see there was a question earlier on about ex-works transactions where the buyer is fully responsible for the export and for the importer on the other side. The answer to that would be, even if you are selling on ex-works, you still might be practically responsible for providing certain details like classification information and details of the products. So that does raise liability on those transactions. As the seller, you still are responsible to know if those goods are going to an embargoed country, for example. It's going to be very difficult to explain to the US export authorities, if you sold goods knowing that they were going to an embargoed country and you still completed those deals. Even if you weren't the actual exporter, you could find yourself with indirect liability there as well. So I would watch out for that. But essentially, TechX as a business, we approach this holistically. We like to have one party handle everything end to end. We focus on the import side, but we can certainly, help provide advice on the export side as well, and everything in between, like classifications and things like that. We can help you out with as well. So I'm going to pause there for a second and just see if Noah would like to step in to add anything to the import side. Otherwise, we can jump onto the next slide, which is just focusing on the common pitfalls. But I think we've covered most of it, so far on the slide.
Sure. So, excuse me. So, Gary, you've definitely covered extensively the import side. I just want to say that it does, both from the export and the import, does sound very complex and complicated, and a lot of people may want to shy away from doing something like this because of the risks involved. But if you've got the right type of partner and you really do your homework before, it is something that can be done very easily, and with the right partner, and something that can really help grow your international business. So with that said, I think we can go into the constraints. Gary can go into the constraints of not doing it properly. What are the issues? But it is something that, with everything said, can be a smooth and really hassle-free process.
And Noah and Gary, I just want to make one thing clear to our audience too. The reason why, by the way, TechX happens to be a member of ASCDI, but the reason why I thought it was really exciting to have TechX here today is because they become the importer of record. Okay, so when you need those fees, I mean, everything that Gary said confused the hell out of me. It's not. I would run away from those export deals because they're just too complicated. So that's why you want to bring in a partner like TechX, because they become the importer of record. So they become your feet on the ground. They become the people that make sure that your stuff clears customs and gets to the end user. So just to be aware, don't be scared of it. Don't walk away from these deals. Find the right partner to help you execute the deal. And that's really why I'm so excited about having TechX as an ASCDI member.
100%, Joan. I think that not only don't shy away from it, we've really seen companies, mid-sized to small resellers, grow exponentially, just increase their global footprint and manage to take these, get these big end users and these global deals because of the fact that they've partnered up and they haven't shied away from it, but obviously they're doing everything. They're making sure that they're just doing it correctly.
Yeah, we've seen deals where a U.S. company is selling to a multinational U.S. company, and they want the product delivered to 15 different countries around the world. That's just the type of situation where you could use help from a company like TechX.
Yeah,
Should we take a look
absolutely.
at
So,
that next slide, Gary?
yeah, we can
Yeah.
look at that. I mean, the most important thing, you know, that from our perspective, you know, is making sure that you're well prepared. And as you said, in order to do that, you need a local entity at the destination that will act as the importer. And the most common thing that we see, you know, with inexperienced shippers is they assume that you can put goods onto an airplane with a freight forwarder and, you know, it will go through and be delivered to the destination country. But what actually has to happen is there has to be a locally registered entity in the destination country that acts as the importer of record. That is the entity that will be applying for the import licenses. So not only do you have to have that entity, they have to have the prerequisite knowledge to import into that specific country. And when you have a multinational deal where you are delivering to 10, 15 countries, you know, your customer is generally not, it's not their core business. You know, they're not going to understand the nuances of importing into each specific location. So what we do is we provide a infrastructure of entities in these destination countries where we can act as the importer of record, and we then take on that local role. So we import in our name, we pay the taxes and duties, we manage that process on your behalf. We make sure that our local knowledge in each country is applied to your shipment to make sure that you are, you know, compliant with all the local regulations. And that means that when the goods arrive in country, we know that they are going to clear customs first time in a compliant manner, and everything will go according to plan and in line, very importantly, with the budgeted costs on the project. You know, there won't be any hidden fees because of unknown licenses. There won't be any surprises when it comes to, you know, unforeseen duties and taxes. So the goods will get through customs and they will get through on time in a predictable budget. You know, that's very kind of important. And all of those are pitfalls that, you know, often, you know, plague, you know, inexperienced exporters. Another facet is when you import into a country, you are exposed to the risk for many, many years. Different countries have different statutory limits. Most countries, it's in the 5 to 7 year band, where post shipment, you can be subject to audit. And you have to be able to complete those audits to a satisfactory level, and you have to retain the documentation in order to do that. So knowing which documents to retain, in what format to retain them, is very important, you know, both from a destination country audit and from a US export audit, you know, because we've had instances, for example, where our US customer is a reseller, they've been audited in the US, and then the US authorities are asking for physical inspections in the destination country. In this case, it was India. So these goods are now sitting in a data center in India, and we need to be able to provide the support in India in order to, you know, make sure that those imports, you know, are pass their audits, and we make sure that everything, you know, is sound with regards to audits. And that can happen, you know, 5 to 7 years later. Other issues that we see, obviously I've covered complex permit requirements. You know, these pop up with wireless goods, goods with encryption, goods that, you know, are used for certain, you know, purposes and used by certain types of, you know, companies. And, you know, this is something that we take care of, you know, end to end. So these are some very common, you know, items that will pop up, and anything that is not taken care of on this list is going to result in major costs, as well as goods stuck in customs and lost in customs. And that's the key thing, you know, that we are trying to avoid in the end.
So we have now about 5 minutes left. If there are some additional questions from participants, and if not, I'll ask our panelists to give a couple of words of closing advice, if you will. Christine, maybe I'll start with you because, one of the questions that Gary also addressed was if you're shipping out of your warehouse in the U.S. and selling it to someone who says they're in the U.S. and they're going to then export it, and they're going to take all the export risk. Do you still have risk in doing that? And does it matter what the equipment is or where it's going when you do that?
So you have probably less risk, right? If there is a US based entity that's going to be the exporter of record. Where you could open yourself up to liability is if you have reason to know or actual knowledge that that party in the US is going to be exporting the items to a prohibited destination or entity or individual. So it's about having the right reasonable level of diligence given your business, the way that you operate your business. So it's possible to have liability, but obviously dealing with somebody in the United States, and if you have no indications or warning flags that they're going to be violating the US export control laws or sanctions, you're probably insulated. But you can't bury the way we always say is you can't bury your head in the sand, right? You can't
Right.
not take any sort of reasonable course actions to know who you're dealing with.
Best practices for your company really require you to vet who your customer is and who your suppliers are. And you really need to dig in a little deeper. If you could just, do a Google search and find out that really that company that you're dealing with is Iranian and that's who you're selling to, or Dubai and it's then going on to Iran, you can't just ignore that. You need to do that due diligence and make sure you're covering all the bases.
Correct.
Joe, I know you wanted to make a few announcements. We're just about winding up, so take it away.
Neil, I saw you pop up on the screen. I think you have something to add. You're muted, Neil, but I saw your face pop up. I just wondered your question.
Yeah, why did that
Major
happen?
event. No, nothing to add, but thank you.
Okay. I just know that you're always on top of this import export stuff. I mean, you live and breathe it. So I respect your expertise. That's what it is.
Well, thanks. But anything I know because Barbara, who is on this call from World Data, is all over this stuff, every day. So, she keeps us in tune with all this, and I appreciate what she does.
Sure. Well, I want to thank
Joe,
Yeah, go
I
ahead.
was about to say, before you make your announcements, I just want to thank our three panelists. I think we all learned a lot today. The biggest thing we learned is how much we don't know, and that's always a good result if you go away from the call and know where you should be asking questions. So thank you, Christine. Thank you, Noah. Thank you, Gary.
And then thank you all for joining us today. We're going to share this recording later today with everybody who's been on the call, as well as our friends who couldn't make it today. We'll also share all the contact information. So if you have any specific questions that you want to ask any of our speakers, they'll be more than happy to reach out directly to you. I put up on the screen, we have a bunch of virtual and physical meetings planned coming up for 2023. You'll hear more about those. And lastly, I wanted to thank our panelists today who spoke. And what we're going to do is, you all see this great Good Planets Are Hard to Find ASCDI shirt I have on. We're going to make those available to our panelists and our speakers for today. We want to thank you all very much for joining us. Have a great rest of the day. Happy New Year. Happy 2023, everybody.
Thank you. Bye, guys.
Thank you.
Bye.
Likewise.
Thank you.
Take care, everybody.
End the recording.